I'm very glad that you guys are interested in today's talk, Cryptocurrency for Dummies. But before we move on to that, we'll move on with how to join us. But let me introduce you guys to our club first, okay? So many of you will be asking like, what is AKPK? And what's the purpose of Taylor's AKPK Club? So first of all, AKPK is short form for Agency Counseling dan Pengurusan Kredit, and they are a financial management agency by Bank Negara Malaysia. And as for Taylor's AKPK Club, we are basically a baby version of the agency, and we aim to educate the youth, especially university students like you and me, to become financially smart and prepare them for their future work life or marriage life. You know, there's things that you should learn before you graduate. Like, what are you going to do with your first paycheck? Like, spend them all, split them up to your parents, or keep it all in the bank? You know, like Shopee is having sales every month. 11/11 sales is coming soon also. And I'm sure a lot of you guys would put things in your cart, but you just put them there. You never hit the checkout button. Well, that's what I do. What about you guys? I think it's relatable to a lot of you. Yay! So our club has monthly financial sharing sessions, and today is only the third episode because we're quite new, right? And we are now partnered with Fly, which is Financial Literacy for Youth, also a community club. And if you have any other questions regarding the club, you may send us a DM via Instagram, and we'll try our best to reply to you as quickly as we can. And as for the question, how to join AKPK, the sign-up form will be given at the end of the talk, so stay tuned. On a side note, our club is recruiting an assistant director of members development. It's open for all Taylorians, doesn't matter if you're in college or university. You don't need any prior experience. Just join us and learn together. Though it would be better if you have, but you know, where do you start if you need experiences everywhere but you don't have? So here is the first place you can join us. Just head to our link tree in our Instagram bio to get the link to sign up. And our team has also pasted the link in the chat box. I hope to see you guys joining our team. So here's a little preview of our session tonight. Moving the slides. Slides. Oh, it's a little lagging. Okay. So it's just like what we've posted in our socials. Our guest speaker will be sharing the basics of cryptocurrency, investing in it, and how to identify scammers. And moving on, I would like to welcome our guests from the Malaysian Financial Planning Council, MFPC, Madam Chong Kar Yin, Executive Director of MFPC. Madam Chong, are you here with us? Yes, maybe, maybe not. Maybe she's late.
Yeah, I don't think she's here yet.
I don't think she's here with us, but it's okay. We also have our advisor from AKPK, Mr. Desmond. Hi, Mr. Desmond.
Hello, hi everyone. I didn't on my video because I'm in my t-shirt. Yeah, because
okay, sir.
Yeah, so I really happy to see everyone here, and today is a big numbers, and congratulate against all the committee members for successfully run these events, and special thanks to Prof. Christopher who accept our offer to be a guest speaker, and well done the MC. And I hear what you just introduced, AKPK, fantastic, precisely, this is what we did.
Thank you, sir.
Congratulations again. And I can see immediately the recruitment process going on, a lot of people asking how to join you and become one of you. Congratulations again, and waiting to hear more from you and from Prof. Chris, and well done again. I hope later maybe if Madam Chong Ka-in from MFPC will join us, then maybe we invite her to speak again. Get back to you. Thank you.
Thank you, sir. So glad to have you guys joining us tonight. So here's our highlight of today. Our star of the night, guest speaker, Professor Dr. Christophe Schinckus. I'm sorry if I read it wrongly. I'm very sorry for that. But Prof. Chris is a professor and head of school of accounting and finance at Taylor's University. He is also an honorary professor at the University of Leicester in the UK. He published more than 100 papers in peer-reviewed journals, and his research deals with econophysics, which is physics applied to finance, cryptocurrencies, and FinTech. He holds a PhD in finance from Sorbonne University in Paris and a second PhD in philosophy of mathematical modeling from the University of Cambridge. Welcome, Prof. Chris. It's our honor to have you with us tonight. The floor is yours.
Thanks a lot. Thanks a lot for this introduction. I didn't expect to have a so long introduction. Thanks a lot, Denise, for this kind introduction about me and for the picture that you found, I think, in our MIT website. Anyway, good for that. Thanks a lot. I would like, before starting, thanks all of you, for the organization of this event. I think it's a very good opportunity for you to share what you are doing and really amazing work in terms of organizing this event. And it's always a pleasure for me to be with the students and to be part of what you are organizing. AKPK, it's a while now that I'm working with Mr. Desmond. It's always a pleasure to see him around and to work with him. And we still have a lot of things on the table. So I'm very pleased to be there with you. So let me start this presentation. So I'm going to share my screen, if you don't mind. Would you be okay with that? Or are you okay with this? Or you want to
yes,
keep the slides on your screen? Okay, thanks a lot.
Yeah.
That will be, I think, a good point. Give me 1 second to share my slides. I just double check that my slides are already there. Okay, all right. So give me 1 second. I think sometimes there is a kind of lag. It's a bit, I hope
it's fine.
It'll be okay. Okay, let me know if you can see my slides now.
Yep, it's there.
Okay, good. I will put full screen to be sure that, okay, is it clear for everyone?
Yep.
Okay, good. All right. Thank you. Then let's start then. Okay, very good evening to all of you. My pleasure to be there with you to talk about a very important topic, cryptocurrencies for dummies. It's to be honest, to put dummies and cryptocurrencies together, it's a bit challenging because there are a lot of things to say about cryptocurrencies. It could be very technical very quickly. A lot of things to say. I will try to keep it very, very basic, introductory, because this is the purpose here. Actually, the idea, as you can see here, is like Friday, 5:30 to 7:30. I don't plan to keep you 2 hours on the topic, to be honest. I think 25 minute, 30-minute talk is enough to give you a quick overview about the key points on the cryptocurrencies. And after that, actually, we can have a questions session, and that you can ask all the questions you would like to ask. Again, I plan to talk about these things that are on this nice poster. So the basics of cryptocurrency, investing in cryptocurrencies, and how to identify scam. And I think that that's directly in line with the purpose of the club, of course, of the AKPK club, to be sure that you are aware about the financial world in which you are living and the digital world in which you are living. And in this case, is financial literacy related to cryptocurrencies. And again, cryptocurrencies it's a very difficult topic. A lot of things to say. This is the menu for tonight. Okay, what is the cryptocurrency? That's the big questions actually that would be for the talk. But I will start with giving you kind of a very general definition, like some advantages and myths that are usually associated with cryptocurrencies, because actually we can hear a lot of things and we don't know sometimes if it's true or not. I will talk a little bit about the extent to which we can see the emergence of cryptocurrencies as a revolution and the difference with usual currency. Then related to that, the fact that it's a revolution is that it's a kind of how to raise capital through cryptocurrencies. And actually, it's one of the big points of cryptocurrencies is that we can, everyone could potentially, eventually create a cryptocurrency and raise capital through this mean. Then how to invest in cryptocurrencies, what are the risks? So I will talk about the kind of markets in which you can actually invest and buy. I will not talk about the brand and the commercial markets, you know, like, I mean, the different kind of existing Coinbase and these kind of things. I will not talk about that. I will talk rather about the organization of market, like decentralized, centralized, and hybrid markets. So it's more about the organization of the market rather than the brand that I would say, oh, this app is good or this website is good. I will not talk about that because it's just more marketing. I will more emphasize the organization of the structure of the market and how does that influence actually the cryptocurrency itself. Finally, and that's the last point, I will talk about how to identify scams and fake cryptocurrencies. On that, I will give very general comments, and then I will give maybe 1 or 2 technical comments. What is a cryptocurrency? We start by this. Again, we could actually, I mean, generally speaking, we could define a cryptocurrency as a combination of 2 big concepts: currency, that all of us, we are quite familiar with, and cryptography. And this is where actually things start to be very difficult, because cryptography, it's quite complex. And everything, cryptography plus currencies in a digital context, and then we have the idea of cryptocurrencies. And the idea then, as you can see, on these slides, is to have a digital asset that is ruled by a cryptographic algorithm in order to be sure that all the organization of the market is actually decentralized. And so that's a very first important sentence. So it's a digital asset. So that means you don't have physically a banknote or a coin. It's something that you cannot touch, okay? It's ruled by a cryptographic algorithm. So there are a lot of algorithms, and I don't want to go in the details of this, but it's just a computational based mechanism based of algorithms that ensure that the system, the market, and the way you can buy, the way you can sell, and these kind of things is actually decentralized. Decentralized means that there is no one authority somewhere deciding the amount of money that can be on the market and ruling the market. And that's a very big difference with the traditional currencies, because who is the financial authority for the traditional currencies? I mean, fiat currencies, I mean, the currencies associated with a country. You have the financial authorities and the central bank, they are issuing the money. So we have a central authority and they are managing the system. And actually, this is not the case with cryptocurrencies. That's probably the very, very big difference, decentralization of the system. That means that basically, if you want to have a kind of metaphor, it's a bit like an Excel file that you are sharing on the cloud. Okay, everyone has access to the Excel file with all the records, and every time that someone is buying or selling something, it's actually with a specific cryptocurrency, everything will be updated in the Excel file, and everyone on the network will have access at the same time to the same information, and no one can actually delete this information from the Excel file. Roughly speaking, I mean, this is related to blockchain technology. I don't want to go too much in details on that, but if you get, I think, the intuition that I'm emphasizing now, it's like an Excel file. The Excel file is actually a kind of ledger recording all transactions related to a specific cryptocurrency, and everything is actually, all the information is actually kept in this file, that is actually shared by everyone in the network, I mean on internet, if we talk about cryptocurrencies, and no one has the authority or the power to delete this information. So that's why there is something that is very attractive with the cryptocurrencies, especially Bitcoin, is the idea of traceability and immutability. That means that traceability means we can track and we can come back to the previous transaction, what happened in the past. We can really come back. We just go in the file and we check what happened in the past. And that's actually traceability. Immutability means no one can delete what happened in the past or a specific transaction. And because of these 2 characteristics, it's very, very attractive, because we don't have necessarily this point with the cash and the traditional currencies. We know that a lot of activities can be illegal. Some part of the money disappear and these kind of things, money laundering and all these kind of things. Actually, cryptocurrency could solve partly this kind of problem simply if they are based on the blockchain protocol, based on this idea that we have immutability and traceability. So anyway, I don't want to go too much in detail on these aspects, but I want to emphasize that this point is important because it's related to this cryptography point. So virtual money, you get it. It's not, I mean, it's digital. Cryptography algorithm means that it's a computer-based organization of the market and the system. Decentralized, no one has the power. No one can change anything, and everything is actually public for everyone. So this is what here I was, I mean, that's the summary of this slides, okay? Cryptography algorithm, validated, recorded, and secured through an algorithm, and decentralized, no central authority. So that's actually what we are used to, the way we are used to present what is a cryptocurrency. The background, the technical background is actually the blockchain technology, as that I was referring a few minutes ago. This idea that, you know, we can keep a ledger with all the transactions that no one can actually change, and no one can, and we can track actually all the records. That's the blockchain technology. That's the background of the cryptocurrencies. The first cryptocurrencies emerged in 2009. It's the Bitcoin. And as you probably know, you heard about Bitcoin, quite famous right now. It's important to mention that Bitcoin is actually the first application of blockchain technology, okay? Blockchain technology is a very old idea in terms of theoretically speaking. It's very old, to be honest. But we were able to implement the blockchain technology only in 2009, 2010, because the computers became more and more powerful and important. So and the first application is Bitcoin. So you can see that it's interesting because I'm talking about cryptocurrency, I'm introducing to you cryptocurrencies, but I'm also echoing to blockchain technology because they are actually together. It's very difficult to talk about cryptocurrency without talking about blockchain. Actually, it's possible to have cryptocurrency without blockchain, but this is not really what we are used to call cryptocurrencies. Then it's a digital currency. It's not a cryptocurrency. Here, blockchain technology ensured the crypto part, that is the algorithm. So anyway, so that's why I mentioned here. Two key points that you have to keep in mind. Bitcoin. First one, the most famous probably, and what we call an altcoin. Maybe you heard this concept before. Altcoin simply means a cryptocurrency that is not a Bitcoin, simply. That means it's coming from alternative coins. So the first altcoin was actually Litecoin that emerged as we are used to say, a fork of Bitcoin. That means that some people using Bitcoin in the network of Bitcoin, they were not really happy with the way the Bitcoin was organized, the market was structured, and these kind of things. So they decided to create, to leave literally the community and to create their own community and their own cryptocurrency that they call Litecoin. But that's why it's a fork, because actually it's originally is the same, but then it's some part of people who actually were involved in Bitcoin network decided to create an alternative network. That's why we call that a fork for this case. So you might be surprised, but today we have more than 2,500 cryptocurrencies in the world. And every week we have new ones. It's quite amazing, and that's a big difference with the traditional currencies. Usually, a traditional fiat currency is associated with a country. You know, it's national money of a country. And you have the US dollar, you have the euro in Europe, and we are used to associate a country or an economic reality with a specific currency. But with the cryptocurrency, we cannot necessarily associate an economic reality. We cannot say, oh, US dollar, it's related to USA. We know, I mean, intuitively, but here cryptocurrencies like, for example, XRP, what does that mean? You know, we don't necessarily know. Dash, what does that mean? Zcash, what's that? So that means that we have to pay attention, and it's at the same time an advantage and at the same time a disadvantage. So, but we have to be careful. And I hope after this talk, you will have a little bit more input to deal with this, okay? On this line there, you can see Bitcoin, first one, Litecoin, the second one, then XRP, Monero, Ripple, actually, this one, the name is Ripple, Monero, Dash, Ethereum, another one that is very famous today, Zcash, and actually it's just the key one that I mentioned there, but we have today literally more than 2,500 cryptocurrencies. That's quite amazing, to be honest. In terms of advantages of cryptocurrencies, we have, as I mentioned already before, some advantages that related to the blockchain technology and the idea that actually all transactions related to the cryptocurrencies actually are kept. The records are kept and they are immutable, so no one can change that. That's a big advantage, and because of that, as you can imagine, we can use that to reduce corruption by emphasizing this aspect of traceability. All transactions related to cryptocurrencies,
There is a technical
they
problem.
are kept.
Sorry, sir.
Yeah.
There was a technical problem just now. It was lagging from your part.
Okay. Can you give me one minute? I think I know someone is trying to call me, and I'm using the you know, the hotspot here.
Yeah, sure.
Wait,
sure.
huh? Can you
Okay.
give me wait, huh? Give me 1 minute. I will just stop to be sure that I'm coming. Okay, I apologize for this. Someone was trying to call me and not my window, and you know, anyway,
Okay,
even if the person see that I can, anyway, all right, I'm coming back to what I was saying. Try to focus a little bit. Sorry for this again. I was explaining you that yeah, a big advantage of the cryptocurrencies is actually the fact that they are computer-based and algorithm-based. Means that we keep track of everything, and no one can change the past. Means that we can use that in order to fight against corruption, but also to fight against money laundering. So that's a big advantage of cryptocurrencies. And actually, this advantage is also developed by some country in terms of taxation, to be sure that everyone will pay the taxation and these kind of things. You know, there is an example of a country that we call the Digital Republic, is Estonia in Eastern Europe. And actually they are implementing this kind of technology to be sure that everyone will pay the tax and these kind of things. They are using this advantage of cryptocurrency, I mean the traceability, to be sure that there is no money laundering, these kind of things. So that's a big advantage. Another advantage related to, again, this point of algorithm-based and computer-based is the fact that if we use cryptocurrencies, we could actually reach people that usually we are not able to reach. Why? Because especially with a very poor country where maybe the level of corruption is very high, if you give $100, you know, at the end of the day, the person that is supposed to get the $100 might get only 10, because a lot of people will take something in between. Actually, by using cryptocurrencies, we could lock from an algorithmic point of view and ensure, and I don't go in details now, but we could ensure, algorithmically speaking, that the person that is targeted will get the complete amount, and no one would be able actually to take something in between. So that's actually a big point, a big revolution. And actually, this is actually, I know that there are some projects, United Nations are working on some application of cryptocurrencies in order to help unbanked population and to increase their ability to have, you know, some money, especially some project in Kenya, in Nigeria, and so on. Then we have another questions, and I will come back a little bit later on that, the question of the digital wallet, because you might ask me, okay, cryptocurrencies, if I want to buy cryptocurrencies, and I'm going to explain you later how you can buy, where do I have to keep this money? Because we cannot keep it in our wallet because it's digital. So you have two ways basically to keep the cryptocurrencies. One is physical. So you have a device, a physical device that you plug to the computer, and actually you can store the files that are related to your cryptocurrencies on this device. But of course, there is a risk. If you lose it, if someone will steal it, there is a risk there, okay? The other one is to have no device, to have everything online, to have the cloud. However, you have a risk because if there is a cloud, if someone is hacking you or find a way, then maybe one day you will go on the platform thinking you still have the money and everything disappear. And the two problems are still there. So, and that's the big question. So here, for example, with the unbanked population, there are still questions. Most of the time, they don't necessarily have access to all of them to internet. So they are using a phone, but it's still possible to do everything by phone and cryptocurrencies. Anyway, so that's here the question. I will come back on this problem of the digital wallet, but that's another advantage of cryptocurrency. So you got the 2 points. The traceability is very important here. Decentralized aspect now, that's another point that is very important, is the fact that now people are in charge of their money. So, and at first sight, you might say, why am I saying that? Simply because usually we are used to think about banks. Where do you put your money? In a bank account. Where do you keep your saving accounts? On the bank account. And you know what is interesting? Do you remember previously what I show you here? The first cryptocurrencies in 2009, and it's not for nothing. It's not a coincidence. You know what happened in 2008? Financial crisis. Financial crisis related to what? Related to the mortgage market in the US that actually created the collapse of the banking system. So in 2008, a lot of questions. I mean, the global banking system has been challenged. So that means that in 2008, a lot of people start to ask a lot of questions about banks and their ability to, manage the money of people. Because some people, they just have they put money in the bank and then the bank is in bankruptcy. So, okay, the government might say, okay, you know what, I guarantee you will get $100,000. But if I have $200,000 in my saving account, I'm close to be retired. I work all my life. Actually, I will get only half of my savings. So a lot of people start to ask questions about what happened with the banks, how we could actually develop an alternative way of managing money without banks. That's the idea at the beginning. That's the way Bitcoin emerged in 2009. It's not a coincidence that it's just 1 year after the financial crisis. And the idea is that now with cryptocurrencies, we have a decentralized way of managing the currencies, means that there is no central authority and people are in charge of their money. What do I mean by that? I mean that the money is actually everywhere on this Excel file. I make it easier, okay? On this file that is shared by everyone in the network, on this ledger, let's say, there is a ledger that's shared by everyone in the network, and the money is there. At the same time, I mean, the information about the money, not the money itself, but the information about the money is everywhere at the same time in the network. Means that no one has a control on it, on the information related to the money. But of course, individually, your own money is either on a physical device where you store your cryptocurrencies, or on the cloud application if you are storing your cryptocurrencies via the cloud. But the control of the money, the information of the money, the way the money is organized and exchanged is actually via the network and via the ledger that is actually updated for everyone at the same time. So no one has the power to define how the market is working. So that's a good point. And another advantage related to that is the fact that if we don't need banks anymore, then we can cut the middleman. And usually banks, they are charging management fees and they are charging every time they do a service, they charge. So here the idea is if people have the control of their money, we will save money related to all this cost for the middleman, associated with the middleman. So that's a couple of advantages that are usually mentioned related to cryptocurrencies. Honestly, I could mention 10 others. I could talk all the night on that, but I have to move on. Some myths now on cryptocurrencies. First of all, and that's quite funny, a lot of people, they think, oh, cryptocurrency is a bad thing, especially maybe older people. I heard about that. They say, oh, cryptocurrencies, we don't know what it is. People who want to buy illegal things and bad things, they use that because they think it's anonymous, so no one can find them. And actually that happened at the very beginning in 2009. a lot of people, they use the Bitcoin to go on the dark web and Silk Road and buy a lot of, you know, like weapons, drugs, and things that thinking that safe is algorithmic stuff. So it's a lot of data, a lot of code, and so complex that no one will be able to find me. However, they have been surprised that approximately 2 years in 2011, FBI started to actually track, find a systematic way to track people using Bitcoin for illegal activities. So it means that then someone knocked the door and said, hey, you know, finally we know that you were at that time, you were in that place and you bought illegal stuff. And then big problem. So now, to be honest, we cannot consider that the cryptocurrencies are anonymous. They are what we are used to say pseudo-anonymous. Means that the information is everywhere in the network. However, you cannot know exactly the name of the person and what this person bought, because it's in cryptographic way. So it's like the numbers and, you know, it's just a code. You don't understand really. However, if you really have time and you know, and the power and the computational power to decrypt this information, you might get the information and know exactly where this person was and who is this person in terms of IP, in terms of location, and all these kind of things. And of course, the authorities, this is what they do, the police, FBI, and this is their job, you know, to track people like that. So that's why we say pseudo-anonymous. People like you and me, we cannot really see, but the authorities, they can. So, however, there are some cryptocurrencies like Monero and Zcash, for example, or Dash as well, that I mentioned before. Dash, very funny, Dash at the very beginning, I think the name they give to it was dark. So they really explicitly acknowledge that, yeah, we are dark and we are used for dark things. That's they change it for marketing purposes. I think it's a good idea to change, because then, as you can guess, the authorities was like, okay, targeting this cryptocurrencies. But anyway, the idea is that Monero, Zcash, and Dash, actually, they have 2 layers, if you want, of algorithms. So they have 2 or 3 layers. And the first level of code that I told you that could be decrypted, then they have a second one, then they have a third one, and then it becomes very complex to find a person. So, but as you can guess, the authorities are targeting this kind of cryptocurrencies, and they are following a lot the volume, the trading volume of this market, and what happened on the dark web, in order to be sure that there are not too many illegal activities related to these cryptocurrencies. So the takeaway of this, don't think that cryptocurrencies are anonymous. They are pseudo-anonymous. Very few of them are actually anonymous. And yeah, some people sometimes say, oh, the cryptocurrency is Bitcoin. But as I was mentioning before, we know that we have more than 2,500 cryptocurrencies, and more than half of them are blockchain based. This idea that, you know, all the information can be traceable and immutable for everyone. Okay, so now I hope you get the point there. So about, you know, what is a cryptocurrencies and the importance of the cryptocurrencies, the context in which they emerge. And now I would like to say that it's a revolution. There is a question mark there, but I can answer straightforward. Yeah, it's a revolution because it's completely different from what we are used to know from a currency. Simply, first of all, I mentioned some aspects. First of all, there is no central authority emitting and issuing the money. That's a very big difference. The second one, there is no middleman. There is no banks anymore. We don't need banks anymore. So that's another big revolution. Can you imagine a world in which you don't need the government to emit the money and you don't need the banks to manage to keep the money? It's like, wow, it's a bit a libertarian world and this kind of things. There are a lot of ideology behind the cryptocurrencies, as you can guess. I'm not here to talk about that, but we could be in this kind of, you know, this strange world. We could be, but the world is not so easy neither. I'm happy to discuss that later with you if you think that I think it would be the case. I think it would not be the case because the world is a bit more complex. But it's a revolution simply because cryptocurrencies can extend the way we think crowdfunding and the way we raise capital, the way we raise money, especially for SMEs. So in other words, you know, when you want to create your own business, it's not so easy to find investors. And maybe you go to the bank to borrow money, but you know, they will say yes, but and then there is a specific amount, not enough for you to really develop your business. Then you will try to convince people here and there, and it's not so easy. However, with cryptocurrencies, you can actually have a global access to the possibilities of raising capital, and you don't need necessary banks for that. And that's very, very new. It's the fact that now SMEs, if they master the technical aspects, they could actually raise capital with the help of no one. So that's amazing. That's a real revolution. However, as you can guess, there are some people trying to take advantage of this, because then if I can raise capital with the help or the control of no one, that means I could create something fake, convince you to give me the money, and then after I disappear, thanks, bye. And then thank you for your money. That's the scam and malicious behavior. I'm going to give you example later. Now, in the first step, I would like to talk a little bit more about this, raising capital, investing in cryptocurrencies, and that's the next slide here. If you think about investing in cryptocurrencies, first of all, you have to keep in mind that cryptocurrencies are very different from classical assets. It's not a bond, it's not a share, it's not a mortgage, it's not real estate. You know, all these things, they have an economic reality. A share is related to the ownership of a company. A bond is related to something specific as well. You know, a real estate is related to investment, is related to a building, this kind of things. Here, cryptocurrencies, some of them, they have no economic reality. Bitcoin, for example, has no economic reality at all. There is no indicators outside. When you go in the real world, I mean, the physical world, there is nothing that could help you to understand the way the value of Bitcoin could be determined. I'll give you a bit more information on that later. However, there are some cryptocurrencies that are specifically created to raise capital for a specific company in order to develop a particular project. In that case, you can still have, if the project
I guess someone's trying to
is
call
going
me.
well, then the cryptocurrency will become important with the, yeah, everything okay?
You have to go back a little.
Yeah, no, at this time it's not someone, no one is calling me. This one is just okay.
Technical
So sorry for that. I was just saying, yeah, I was just saying that in terms of cryptocurrencies, you might have two kinds of cryptocurrencies. The first one is not related to an economic reality, like Bitcoin. There is nothing in the physical world that will help you to define the value. So that's one category of cryptocurrencies. Another category is related to specific cryptocurrencies that has been created to support a specific project. And if the project is going well, then the cryptocurrency will go well as well. If the project is going not so well, then of course, as you can guess, the cryptocurrency will go down as well. So in that case, you still have a link with the reality. And depending the kind of cryptocurrency you are considering, you might have two kinds of returns. The first one is the classical, the gain in capital, that refers to the variation in the price of cryptocurrency. You buy Bitcoin today at 10, tomorrow it will be at 20. Okay, you get 20. That's the benefit that you will, you get 10, sorry. 20 minus 10 is still 10. So you get the difference as, you know, the capital gain. So that's what you would win. And actually a lot of cryptocurrencies are actually in that situation. But we are observing now more and more what cryptocurrencies that are directly related to specific project. And this is what I was saying a few minutes ago. And then we call it crypto dividends. You are familiar with what is a dividend? Actually, crypto dividends means that a specific cryptocurrency has been issued in order to support a specific project. This project is going well, so they will give you dividend related to the project. So that's quite interesting because this is not the case with Bitcoin. You have Bitcoin, what you are targeting is just that the price of Bitcoin is going up. That's all. That's the only thing you are waiting for. But if you are buying other kind like KuCoin or Bridgecoin, Komodo, there, these kind of cryptocurrencies, they will not necessarily give you a big jump in the price, but they will give you something else. If the project is going well, they will give you what they call crypto dividends. Okay, so that's a bit more something in between a classical share and cryptocurrencies. The last thing I want to emphasize on this slide, if you buy a share of a company, you are partly the owner of this company. This is related to the ownership. If you buy cryptocurrencies, you are not the owner of a project. You might have crypto dividend, but there is no ownership. You just give money. There is no ownership involved in cryptocurrencies. You might have, but very few, and it's a kind of hybrid contract then. But normally, that's a very important point. If you buy cryptocurrencies, don't think you become the owner of this project or this cryptocurrency. There is no ownership related to that. But if you buy the share of a company, you are part of the ownership. So that's an important point to keep in mind. All right, hope it makes sense for you. Now I will give you some words about how to buy, how the exchange of cryptocurrencies are organized. So basically, we have three ways of organizing the exchange of cryptocurrencies. The first one is decentralized cryptocurrency exchanges, what we are used to call DEX. The idea is really to keep this decentralizing philosophy, like, no central authority, no bank, no boss. We are all equal. All people involved in the network should have the same right to know everything about all actions. That's the idea. So that means that the network is working a bit like a peer-to-peer exchange. If you are familiar with that, everyone in the network is actually contributing to the exchange in terms of storage, in terms of power, computational power, and these kind of things. So that's exactly what I was mentioning before with the idea of an Excel file that you share on the cloud. Like, no one has the power to change it, and everything is there. And if there is an exchange, everyone will be updated at the same time. So here, that's actually what is the pro and the cons. The pro related to this is the fact that it's less sensitive to hacking. Why it is less sensitive to hacking? Simply because no one has the power to change the information. And if someone tries to change the information somewhere or to hack somewhere the information, everyone will be updated. Means that as soon as there is something malicious in the network, everyone will know. So we will detect automatically, oh, wait, this line in the ledger is malicious because someone tried to do something that is not common, that is not allowed it. And everyone will be updated in the minute. So then they will know straightforward, someone is trying to do something strange in the network. So that means that it's very difficult to hack because everything can be tracked. But another point that is quite the con on this is the fact that there is no market maker. And I think you heard about what is a market maker. That's a third party that is in between the buyer and the seller to ensure that the liquidity of the market is there. That if you want to buy something, you will find it. Here, because it's a decentralized cryptocurrency exchange, there is no market maker. Means that if you want to buy Bitcoin, okay, probably it will be okay because it's quite liquid, important, and a high volume of trading. But if you want to buy something a bit more not so common, more rare, you might not find anyone who want to sell it. So maybe you will stay on your position for several months. I want to buy this cryptocurrency, but I cannot find anyone who want to sell it. So that's not a good point. Another point that is not a con actually is that the DEX, the decentralized cryptocurrency exchange, usually they don't offer crypto fiat exchange. So that means that they don't offer, what do I mean by this? It's like you have Bitcoin and you want to buy pounds. So you sell Bitcoins and you buy pounds. Most of the time, these decentralized cryptocurrency exchange, they don't offer that simply because you can do that with Bitcoin, decentralized. But if you want to buy pounds, you need a centralized actor. You cannot act in a decentralized way with official currencies. So that's the reasons. Here are some examples of decentralized exchange. Now I'm going to give you some words about the second way of exchanging cryptocurrencies. It's a centralized cryptocurrency exchange, CEX. Actually, they are similar than what we are used to know. And everything you heard about, probably you are familiar with some digital platform like Binance, Blockfolio, CryptoPro, these are quite Coinbase, Gemini. They are very famous, this one, more famous than, Wave VEX or VISQ, that is not very common. But this one are more popular. They are more, we can see more advertisement for this kind of things because we are more familiar with this kind of organization of the market and the exchange. It's actually really similar to a traditional exchange. There is a market maker, and this market maker is in between people who want to buy and to sell. And then, and it's exactly the same way than a traditional exchange. So that means that when you want to buy something and to sell it, you just mention the amount of money that you want to buy or to sell, and then the market maker will have a mechanism to ensure that we can find actually the counterpart for you. Okay, so that's quite common, and the vast majority of the popular cryptocurrencies are traded on this kind of exchange, simply because it's easier to organize, and moreover, they can also they allow a transaction with the fiat exchanges, so with the fiat currencies. Means that it's quite easy for this market maker to have a link with the official markets where you can buy pounds, dollars, euro, and all kinds of currency that you want. So because they are centralized and they are acting as a market maker, they can actually make an easy link with other centralized market, like for example, the currencies. So that's the point. A major issue is security. Why? Simply because if the market maker is dishonest, or if someone is hacking the market maker, then your money will simply disappear. And that's exactly what happened in 2014, I think, in Japan, with MTGOT there. It's a market. The market was existing for a while, several months, going very well. And suddenly, one morning, you go to check the platform and the platform disappeared. Why? Because the market maker, that was a third party, just simply start to think that, oh, we start to have a lot of money there. So they just disappear. So as you can guess, then a lot of legal problem. Now the guy is in jail. The guy who was at the origin of that, we found him and he's in jail. But anyway, here the security is a problem because hacking as well. If there is a market maker, that means that there is a centralization of the information somewhere. And if someone is clever enough to hack this somewhere, then you might lose all the money. As you can guess, this one is very, very new. We have something in between, what we call the hybrid cryptocurrencies exchange. And they try to combine the best of DEX and CEX. So they try to ensure the liquidity that we were talking here by having a market maker, and the security of a DEX. Means to be sure that no one will hack a centralized information. So basically they try to have a decentralized information and a market maker to ensure the liquidity. So that's the idea. It's very new, to be honest. The first one was created in 2018 here, Corex. It's quite new. So I don't want to go too much in detail there. We have, we are still at the very beginning. We don't know very well if they will work well. It's quite stable now. It's not like a big jump. To be honest, this is the most famous, the one that I guess if you want to buy Bitcoin, you will go to this kind of app, Coinbase and this kind of stuff. This is very classical. This one are for more specialists. If you are more specialized, if you know a little bit more about the technical aspects, then you can go on this aspect, or on this one. But if you are a beginner, then it's usual you go for this one, but then it's important to identify a very well-established platform and not like a non-new platform that claim to buy a lot of things, where you can buy a lot of things. If it's new and not well-established, better not to go on it. So that's it for the investing in cryptocurrencies. Maybe before going maybe I can go into risk. I will give you more information about investment in cryptocurrencies through the analysis of the risk that we are facing when we invest in cryptocurrencies. And actually, there are a lot of risks when we consider the cryptocurrencies. The first one is the security, and I think I mentioned some aspects on that. The first one is the cryptocurrency itself. Some cryptocurrencies might be fake. They are there, they are new, and they look attractive. They look like, wow, that's fun. They have a nice design. they look attractive, all the explanation look clever, the idea, the project, and so on. And you give money, and in 2 weeks they disappear. The company, everything, it was fake. They just disappear. So the cryptocurrency itself, you need to know that you have every week, you have dozens of new cryptocurrencies. And at the same time, you have dozens of cryptocurrencies disappearing every week. The exchange, it's another point to keep in mind. This is related to what I was mentioning before. If it is a central exchange, you have to keep in mind that you have to use a very well-established platform and to ensure that there is no, a bad market maker disappearing with your money. All these kind of things. The security risk, I would include also the crypto wallet and the physically stored or on a device or the cloud-based. As this is what I was mentioning before. If you have cryptocurrency, you have to keep them somewhere, and you have two choices only. Either you keep them on the cloud application, but what if someone hack you, or you can keep them in a a physical wallet. It's a device, but what if you lose it? What if you destroy it by putting water on it or whatever, What if someone steal it? So that's questions that you have to keep in mind. Crypto hype risk, well, that's, the risk related to buying something that you don't know what it is. It's not because it looks fun and it looks like attractive that it is. And a lot of cryptocurrencies, they play with this, new wave. It's like to be in, and they will promise you a lot of returns, and it's easy because you have a guy with 5 masters in IT, and they promise you a lot of things. Don't believe a word of these kind of things. It's, of course, it doesn't work. There is no free lunch, okay? There is something that you have to keep in mind from your finance modules. No free lunch. So that's a point. And cryptocurrencies, you have to keep that in mind. There is no free lunch at all. Never. So this risk is very important to keep in mind, because if you want to invest in cryptocurrency, one of the first to buy. So you need to read about the cryptocurrency. You need to read the white paper. What is the white paper? The white paper is the technical explanation of the cryptocurrency, the technical explanation of the purpose of the cryptocurrency. So how does it work? Why it has been created? How it will be organized? How it will be exchanged? If you cannot answer any of these questions, don't buy. Never, because there is something wrong. And I will come back later on that, because it's part of how we identify the scams. Because the scams, they talk about that in a very quick way. But then you say, okay, they know what they're IT guys, they're not good in explaining, but they're very clever. I mean, if you have this idea, you will lose money for sure in cryptocurrencies, because they play with that. Some scammers, they play with that. So that's the point. So when you want to buy cryptocurrencies, you need to understand what you are buying. Not necessarily the technical details, but at least conceptually, you need to have a good idea about, okay, this cryptocurrency is based on this kind of exchange, will be used for this kind of project. I can buy or sell in that way. You need to understand and answer these questions that I was mentioning before. And a lot of people, they don't, simply because they say, oh, it looks fun, it looks cool. I can actually invest money and have a lot of money in 6 months. If you're lucky, yes. If you're not lucky, no. The crypto currencies risk, and this is what I want to mention there. You have to keep in mind the liquidity, the volatility, and I'm going to give you more words about that. But come back on liquidity. The liquidity is related to what I was mentioning before. Are you sure that every time, if you want to buy a new cryptocurrency, okay, it looks attractive, you are convinced, you think that is good. Are you sure that in 1 month you will find someone to sell? If you want to sell it, are you sure that in 1 month you will be able to sell it? Or maybe you will have to keep your cryptocurrencies for 2 years, because no one will want to buy. You will not have a counterparty in the trade anymore. So you need to pay attention to these illiquid cryptocurrencies. And there are a lot of illiquid cryptocurrencies. Means that they have an exchange every 2 months. And it's not, with that, you cannot do an active portfolio management. You cannot do something. It's very important to keep that in mind. That's also a reason you would say that, to avoid this liquidity risk, you might actually target a centralized market. What I was mentioning before? this kind of market, CEX, if you target this kind of platform, you will reduce the liquidity risk, definitely, okay? Volatility risk, and this is what I want to emphasize. Cryptocurrencies are well known to be highly volatile, okay? So it means that the variation can go up and down. So of course, we are human beings, so we have a lot of behavioral biases. We always think that you know, the bad happened for others and the good will happen to us. At least we have this big hope. So we always think that if I buy Bitcoin, I will become rich, or if I buy a cryptocurrency in 1 year or 6 months, I will become rich. I hope that if you are doing studies in finance, you don't have these thoughts, because if you still have these thoughts, that means you didn't remember well all the teaching related to finance, because it doesn't work. Even in cryptocurrencies that are different, it doesn't work. The volatility is very high for different reasons. One of the reasons is the fact that there is no economic, or it's difficult to identify the economic reality that could justify the evolution of the market of the cryptocurrencies. For Bitcoin, for example, Bitcoin between 2009 and 2014 was absolutely not related to any kind of economic indicator in the world. They were like their own dynamics, their own evolution, with no link with oil, interest rate, or these kind of things. Just like they are on their own in their bubble. And people were saying that, okay, the value of Bitcoin is actually only speculative asset. You just buy, you wait that it's going up, and you sell it. But starting from 2014, 15, we have a transition. Starting from 2016, we observe that Bitcoin start to be more and more correlated to some economic indicators. And there are a lot of works on this. If you ask me which one, some papers, they mention gold, because it's an alternative investment to the traditional financial markets. It looks like there's a parallel evolution of gold and Bitcoin. Other people, they say, oh, there is a parallel evolution of Bitcoin market and the Standard & Poor's 500, for example, or the FTSE, you know, the big indicators of financial markets. Why? Because Bitcoin start to be used more and more in the economic reality. And because of that, because Bitcoin start to be used more and more in the real economy, then we can start the first movement, the first common movement between the Bitcoin and the economic indicators. Okay, so there are a lot of movement on that there on volatility, but still the volatility of the cryptocurrency is quite high. You have to keep that in mind. Vanishing risk, I was mentioning that before. Keep in mind the fact that a lot of cryptocurrencies, they are just new and emerging every week, but they are also disappearing every week. Two other risks that I would like to mention, the tax and the regulation, they are actually together, simply because a lot of people, they think that, okay, if I'm investing in cryptocurrencies, I don't have to pay tax, but that's not correct. In Europe, for example, now Bitcoin is considered as an asset. Means that if you buy Bitcoin at 10 today and you sell it at 20 tomorrow, you have to pay tax on the gain that you will have. You have to pay tax because it's an asset. It's you are making benefits, so you have to pay taxation. So a lot of people, they are using cryptocurrency to avoid taxation, but at the end of the day, you know, they are very surprised to see that the taxation authorities are knocking their door, asking them to pay what they are supposed to. There is a risk there because it's not clear sometimes. In some countries, it's clear. In Europe, in Switzerland, especially, it's clear. There is a clear document. But in some countries, they don't mention Bitcoin as an asset or not. Is it an asset or is it a currency or not? There are a lot of questions. Regulation risk, like some countries, they do not allow cryptocurrencies, simply. Like in Vietnam, for example, as far as I know, they still forbid the cryptocurrencies exchange. So it means that you are still not allowed to buy or to sell. There are more complex things here that I don't want necessarily to share, to go in details. There are some countries they ban the cryptocurrency exchange, but they allow you to be part of a network in order to do the mining activities and the validation and all these kind of things. It's a bit strange because it's a bit schizophrenic to do that. But it's important to know if you are allowed to buy or sell cryptocurrencies in the country in which you are. For example, I was just playing around with some cryptocurrencies here on platform here. Bitcoin, I was able to buy or sell, but other ones I was not allowed it to buy. I have no reasons for why. I didn't dig the reasons, but it looks like these cryptocurrencies are not allowed in Malaysia. And actually, if you want a bit more information, you can. I mean, I guess you will have the slides. I share the slides with AKPK Club. I hope that this can be shared with everyone for you to have the link here, or take a print screen if you want this link. But that's important to know because even if you are hiding the activity you are doing on the net, if you are doing something that is not legal in the country in which you are, you might expose yourself to a lot of things. So that's important. Yeah, this is what I was mentioning before. You know, is it safe to or legal to buy Bitcoin in Malaysia? This article is explaining a little bit details. As I was mentioning before, I was a bit playing around. I don't remember. It's a couple of months ago. I was doing that. Trying the kind of cryptocurrencies that I can buy in Malaysia. Some of them I cannot, and the reasons that the message I got is like cannot be traded in your area. So means that there is a kind of somewhere there is a kind of list of what can be done and cannot be done. I didn't dig these aspects, but that's a good evidence. Okay. I will not go further related to the investment in cryptocurrencies. Before going on the next part of the presentation, the last part about the scams and the fake cryptocurrencies, I would like to say that everything I've said now is kind of very introductory without discussing the technical aspect and background that is quite important actually. But I try to keep it smooth and very introductory. I don't know if we can mention it here, but you might be aware that in in 2 weeks, on the 21 of November, we will have another event related to AKPK, in which I will actually give a little bit more information about cryptocurrencies. That will be the same kind of topic, but I will go further in the presentation of what I'm saying today. So some part of the presentation that I will give during the event, the coming event, will be like similar, but I will take time to go a little bit more in details on some aspects that might be a little bit more technical, especially in terms of investment, the importance of investment. Okay, here I think for an introductory talk, I don't need to go further. I'm more than happy to interact with you on these aspects just after. I can see that I take more than 25 minutes. I'm too talkative. Anyway, I'm going to finish, don't worry. The last part of my talk is about scam and fake cryptocurrencies. I'm using this typography and design that is coming from bitcoin.com because it's very well done. It's no need to do something new here, just to flag the fact that this question is important. How much are we losing in cryptocurrency scams? And you can see that on average 9 million is lost daily. 9 million USD daily lost in cryptocurrency scam. It's a huge problem. At the end of 2018, losses to cryptocurrency fraud could reach 3.25 billion US dollar. So I'm talking about the global market here, okay? But that's a big amount of money. Can you imagine if this amount of money could be invested in a productive activity for the economy and for people who are really in need of? I mean, we can really improve a lot of things around us. So that's a big problem, because here it's just people taking money and disappear and enjoy life. So that's quite important. I'm going to give you some signs here of cryptocurrency scam. First of all, as I was mentioning before, please keep in mind a key sentence in finance is no free lunch, okay? Don't think you will become rich like this. That's impossible. You need to be extremely lucky. And even if you want me to spend all the night talking about the statistical evidence we have and the efficient market hypothesis and all these kind of things, I'm more than happy to do it, but well, we'll do it another time. But you have all statistical evidence against you if you think you can become rich like this. It's impossible. So the first sign is quite easy, is bold claims on returns. Scammers, they promise you unrealistically high profit. They just say, oh, it's easy, actually, it's not so difficult. It's just like this and like that. That's never the case. Okay, the reality is complex. the cryptocurrency in the digital world is a complex world. There is no free lunch and there is no huge profit in a few periods. That's never the case. So if you see that, stay far. It's the same that, the kind of email that we get, like, someone in another country want to give you, ask you bank account to give you an amount of money or whatever, this kind of email that you cannot trust. It's the same kind of thing. The second point that is important to keep in mind, is another sign, is misleading details. Means that they have kind of misinformation. They use a kind of complex language to show that they are clever, but at the same time, it's not so clear. So you might think that, oh, wow, but they know exactly what they do. IT guy, they are like that. But actually, no. They might actually do it by purpose, using complex language to look clever and to convince you that they know what they are doing. But actually, if they know what they are doing, they want to take your money, but they want actually to give you the feeling that they are really developing something. But it's not because you are not a technical person that you don't have the right to ask questions and to have the answers to your questions. If you don't understand clearly how the cryptocurrency is managed, how it is created, how it is exchanged, I mean, it's no need to go further. Okay, if they just say, oh, it's algorithmic and stuff like this, you really need to have more details, how the money will be used and these kind of things. So most of the time, complex language, stay far. Lack of communication. Yeah, cryptocurrencies, most of the time when you want to raise capital via cryptocurrencies, if you create a new cryptocurrency, a very important point is communication. You need, people who are creating ICO, initial coin offer, so creating a cryptocurrencies for the company, they need to be available, and they need to be clear in the communication. They need to be transparent in the way they will answers to everyone. But if you see that they are like, miscommunication, lack of communication, absence, like, something a bit fake, like suddenly they are there a lot and suddenly they disappear for 2 days, and this is the kind of behavior that's a bit suspicious. Okay, it's like, even though they would say, oh, we are busy, sorry, no, that's not, then I don't give my money. If you don't give time to me, I don't give my money to you. So that's an evidence. You have to keep that in mind. Another point is a compromised escrow. Maybe what do we mean by that? Escrow is a third party, okay? Is a third party that will actually keep the money that you would like to give to the project, to the currencies, and will actually ensure that the money will be used in a proper way. So what happens when a company wants to raise capital by using a new cryptocurrency? They will have a website, a white paper, they will have an explanation, they will try to convince people, this kind of things, they will have events, and then they will not collect the money directly. We will have a third party to collect the money, to keep the money, and when the project is about to start, then to be sure that the money is going at the right place. And this third party is what we call an escrow, okay? And actually, when we have a fake and scam and fake cryptocurrency, this third party sometimes is fake, so does not exist. Actually, the same person. If it is the same person, then for sure don't go. If you discover that the escrow and the third party is actually the same or has a link, any kind of link with, organizational link with the company that is issuing ICO, then don't go, because that means that they might disappear together. So that means that all the money that you might actually give and that people will give, actually tomorrow they will disappear and you will have no information anymore and no way to track them. So that's important. The third party, it's important to ensure that it's a trustable third party on this point. Another point is, and that's also, they play a lot on that, ghost team member. So they put like a profile of someone and they will put like 5 PhDs in all ITs and all crypto stuff, and they know everything. But actually, if you really take time to double check with internet, with Google and this kind of stuff, you will find that you cannot find any traces of the person, or you can find information that are contradictory. So they are using, fake profile by building something, and at the end of the day, maybe this person are even not aware that they're on the website of, for a malicious action or initiative. So ghost team member, what does that mean? That means that you need to spend time to really see who is doing what in the cryptocurrencies that you would like to buy. And that kind of information you can really find easily. In ICO, when there is a new cryptocurrencies, normally they are supposed to issue what we call a white paper. White paper means a clear explanation and a technical explanation, clear but detailed explanation of the reasons for why the currencies is created, how it will be managed, how it will be exchanged, and all these kind of things. It's clear, but it's detailed enough to understand. So, and this white paper is very important. In this white paper, you have also the name, the real name normally of the team. With their real profile, you can contact them, you can reach them. If not, again, why? I mean, why should I give my money to someone who is not available if I have questions? So that's very important point to mention. And some cryptocurrencies and fake one, they have no white paper. And that's quite amazing. That show one thing, that people see, they just buy something. They say, oh, this new currency, cryptocurrencies, it's good. I mean, I buy it. So you even don't know what you're buying. If you go in that way, you might actually lose a lot of money in scams, okay? Finally, the last point here that I wanted to mention is the no code repository, in the sense that illegal cryptocurrencies and fake one, they don't have something to share. What they just want is to convince you to give the money and to disappear with the money. So they don't share their code related to the cryptocurrency. However, if it is a real cryptocurrency that is created, you know, you want to convince someone about a new project that you are developing, and to fund this new project, you are creating a new cryptocurrencies. You are ready to share actually the code with the people who are ready to give you money. You are ready to I mean, it's important to have to share the code and to be public, to make public the code of the cryptocurrencies. That does not mean that someone will use it to do something else. That's for sure not, because this cryptocurrency has been designed for this project. But you need to have actually information about the code. If you don't have, then if they claim that, oh, you know, for intellectual reasons or property, this is blah blah blah. This is that. No, if then I don't give my money. That's for sure. If I give my money, I want to have answers. I want to have someone who is available. I want to have the information. Even though I might not understand the code, I need to have access code to ask someone who could explain me. So that's very important. So that's actually this point that I mentioned here. 7 signs are 7 signs of identifying in an easy way, you know, intuitive way, let's say, the scam and the fake cryptocurrencies. I would like to mention that there are also 2 ways, maybe there are a lot of ways, but I just want to mention 2 ways now. More technical to identify or to avoid at least the scams. Some countries, they are implemented regulation related to the ICO. And that's the case in Malaysia. In beginning of 2020, I think, you know, at that time we were in January 2020, actually Malaysia decided to develop a new regulation about ICO, initial coins offering. And they define actually the framework in which a company can raise capital by using ICO. Okay, so, and that's very useful because at least they define the framework, means that everything is clear. And however, that's a good point. However, the bad point is that there are some rules that if you have a small company or very small company, you might not have enough cash to start, because one of the rules in Malaysian ringgit has cash deposit as security. Okay. If you don't have that, you cannot actually use ICO as a raising way. I mean, you know, as a regulated and protected way of raising capital. So it's good because then as an investor, you feel like, okay, I feel safe, I can really trust because there is all the regulation behind. However, if you have a small company and you don't have this amount of money, still, you know, what to do? Then you still have to wait how to have more capital. So still have questions there. But here you can see this article was on the net. It's an article, a short article I have written. At that time, if you remember, April, we were beginning of MCO. I think, for me, I think that this regulation was a very important step for cryptocurrencies in Malaysia. However, that, you know, the journalists and so on, they didn't talk a lot about that because of MCO. I mean, you know, COVID is much more important, and I totally understand. So that's why this was a bit secondary, but I think it's a very big news, especially for Malaysia. Another way to identify or to avoid the scam in cryptocurrencies is to, and I will say something that looks very weird, is to ensure that a new cryptocurrencies will be associated with the ERC20 smart contract. And this is where you might say, huh, what? So that looks a bit strange, what I'm saying. But what is ERC20? ERC20 is a standard. It's an algorithm. It's a specific algorithm, okay? It's a standard defined by Ethereum to ensure that if you want to create a new cryptocurrency, you need to associate this new cryptocurrency with what we call a smart contract. Means you need to put these new cryptocurrencies and everything you want to do with in the framework of this new international standard that is ERC20. Means that everything you are doing will be recorded, will be kept. We will keep the track of everything. Means that at the end of the day, if you are creating a new cryptocurrency to raise capital and you associate, you put this information in an ERC20 smart contract, in a contract if you want, you cannot disappear with the money. And you as investors means that, oh, if you see ERC20 ICO, I can trust. Why? Because that means that the company issuing new cryptocurrencies will not disappear tomorrow, because actually they cannot, because they agree to use these standards that will track them. We know where they are, we know who they are, and these kind of things. And no fake name, we know exactly who is the boss, who is doing what. So it means that it's a kind of transparency. You know, this standard ensure a transparency by using blockchain technology and these kind of things. So that means that you can trust. But, you know, at first sight, if I tell you like, oh, you know, ERC20, you might say, what is that, you know? So it's not necessarily easy to understand what it is. But for this introductory talk, I think if you keep in mind that it's just a standard that allow us to track and to keep track of everything related to new cryptocurrencies, then you are sure that no one will disappear with the money, with your money. That's important. And that's it, I think, for my talk, from my side. Thanks a lot for your attention. A lot of things to say, as you can see. I could talk all the night on that, but I'm more than happy to reply to the questions. I didn't check the chat. I have no idea. I'm coming back now on Zoom part. So anyway, time for questions. Any question?
Thank you, sir. There was a question before this. Let me just search for it.
Okay, I can see the Zoom now, the Zoom group chat. Sorry, I didn't check before because I was discussing. I go on the opposite, okay, order. Okay, the link there, okay. Also, in the meantime, you follow the social update, okay. Okay. I cannot see any questions there, but if you see a question.
Yes, someone asked, is the government with or against this revolution of cryptocurrency?
Wow, that's a very good question. and I think we can debate on that for years. But I will not talk for the government. When you say, you know, is the government for or against? First of all, I would say I would not talk for one government, because depending the government, we might have different perspectives. Okay, so what I'm going to say is that there are pros and cons for government. There are a lot of good aspects of the technology that is used in cryptocurrency, because I mentioned that cryptocurrency is just a way of using blockchain technology, if you remember what I mentioned. And this technology is actually could be a revolution for the government. And a country like Estonia, for example, that we call the Digital Republic. They are implementing blockchain technology everywhere in their country for the healthcare, for the taxation, for everything. They are even inventing a concept of e-residency. So you might live in Malaysia, have business in Malaysia, but you have e-residency in Estonia. Means you could borrow money in some banks there and pay taxation if you have activities there as well. So what I mean is the fact that there are a lot of pros for the government, especially in terms of taxation, because if you use the technology that is behind the cryptocurrencies, I mean blockchain technology, you can actually ensure that everyone will pay taxation on time, and you can reduce money laundering, you can reduce corruptions, all these kind of things. However, at the opposite, there are a lot of cons for the government as well. And the first one is the decentralization of the money, of course, because if you think that, okay, I don't have control anymore on the currency of my country, come on, I mean, you know, as a government, it's an important economic tool to manage, you know, the economic activity. So it's not so easy to say that they are for or against. It depends what we are talking about, you know. So I'm sure you heard about China that is working on the first national cryptocurrency. Means that they would allow only one cryptocurrency that would be I mean, with the Chinese government at the top, and then they would control the supply. But then in doing so, because of the technology that is behind the blockchain technology, they would actually control and know every single thing. I mean, think mean transaction. Every time this central cryptocurrency would be used, the government would be informed. So that's why people are, oh yeah, but I don't want to be like Big Brother who is looking at you, you know, that this is the feeling then. So again, the government, there are a lot of pros and cons. Hope that my answer makes sense. Other question?
There is more questions in the chat box at the bottom.
Yeah. Okay. Good. Okay, I can find it.
Okay.
Let me check. Good evening. The ICO comes from ERC20 smart contract. What is the question? I got it. Malaysia ICO comes with ERC20 smart contract. Well, if it is a general questions, I would say that not necessary. But it's promoted and it's recommended, yes, but not necessary for technical reasons. So the reasons is that ERC20 smart contract is related to Ethereum. Ethereum is a very specific platform on which you can use only Ether as a cryptocurrency. So it means, you might actually want to do ICO without using Ether. So then it's a bit more complex. So to keep it short, it's recommended, but it's not necessarily the case. The other question I can see here, where do you suggest a newbie looking to invest in currencies to start learning on cryptocurrencies investing? Where do I suggest to invest? You mean which cryptocurrency, I guess? Well, in terms of cryptocurrency, it depends what you want. If you want to make money and play this volatility, maybe you can target stuff like Bitcoin and this kind of decentralized cryptocurrencies. However, if you want to support a project, a specific project, like for example, to ensure that the international global transfer can actually be done between all countries, you could invest in Ripple. Ripple is a specific cryptocurrency with a very low volatility, because the Ripple is actually the cryptocurrency that is used in order to be sure that we can do international remittances at a low cost. So it depends what you want, actually. For a newbie, it depends what you want. You want to support a project, or you want to make money in the short term. You want to make money in the short term, focus the volatility. You might lose money in the short term, but you might make money in the short term. So I would then say, like, Bitcoin and all these popular cryptocurrencies, but you might focus on some less popular, but that are more related to a project. Like, again, Ripple is a good example. for the investment. So again, there is no gold answer, and to be sure that you will make money. Again, it depends on your profile as an investor. What do you want to do? Why are you investing? So another one, the creator of such currency, Bitcoin, is not a bank. How will make profit? That's a very good question. Actually, I didn't mention that here, but you need to know that the guy who created Bitcoin is actually, we don't know who created Bitcoin. It's a fake name. It's a nickname. Okay. So it's a nickname, and actually we don't know who is this person. There are still debates today. So it's a name that sounds like Japanese, but it looks like this person. No one knows who is this person. And there are some people saying that it's even not one person. It's a conglomerate of companies. But again, no evidence. And actually, this person is not, don't know how we can make money at first sight because of the blockchain decentralized model. Is not doing clearly profit right now because we would know it. So that's a big question, because it's a bit also related to the mysterious, creation of Bitcoin. A lot of debates on that. I invite you to have a look on origin of Bitcoin if you want. So on at first sight, this person is not making money, and we even don't know who created this Bitcoin. Another one here. You mentioned here, I found the article that the Malaysia government approved 3 official exchange. Okay, yeah, good to know. Thanks for sharing. I didn't check that recently, but that's good link for all of us. Thanks a lot for sharing this. That's good to know as well. This meeting is recorded. I guess, yes, I think it's recorded. Yeah, I can see it's recorded. So it's okay. I'm checking now if I can see other questions. Another article here. Thanks, Wei, for sharing. Crypto trading in Malaysia during the COVID. Yeah, I mean, just maybe one quick word on that. Some people saying that, because of cryptocurrencies, they're not related to the economic reality because of all this COVID, that lockdown and the economic activity that is going down. You could actually buy cryptocurrency, because then, it's not related to the economic reality. So you will not lose money. So this is interesting. So this is what you make me think about, Hui, by posting that. Yeah, that's the reasons for why actually the crypto trading and the cryptocurrencies might have been on the positive trend during the lockdown and all these kind of things. Okay, Instagram. Yeah, sure.
Can I add something on? Yeah. Because in the US also seeing the similar trend because of the when the US government pumping money to the market, and so people are tending to invest more on the financial market and exchange. So you see the similar trend in Malaysia, perhaps?
Well, I don't know if it is the similar trend. I'm always cautious when I'm talking about a similar trend, because the case of Malaysia is very different than the case of USA. But there is something that is going in that direction. Is the fact that in the case of uncertainty with the economic reality, in that kind of context, government has to take actions. And by taking actions, the government, we are not in the time that they print money if they need money. If they need money somewhere, they need to get the money somewhere else. Okay, that's a balance. That's the fundamental good management. Okay, and it's the same for all government. It means that when the government is injecting capital in the economy due to a slowdown, a lockdown, and all these kind of things, then the uncertainty related to the ability of the country to manage this uncertainty is higher and higher, because they are using more and more resources. So what people will do, they will actually turn to something that is not correlated to this uncertainty. And that's the reasons for why we observe these kind of things with the bearish market and the up market on cryptocurrencies. And this is where there is a similarity between Malaysia and US, because both were doing the same thing, injecting capital because of the slowdown in the two sides. And because of that, they increased the uncertainty related to the ability of the country actually to develop the future. And that's the reasons for why the people in the two countries they did exactly the same. They went on something that is not correlated. So that's my answer. So I would say yes at first sight. Okay. All right, good. Hope I answer your question, Hui. Okay, just checking now quickly. Ethereum, Bitcoin, which one is better? Oh, that's I know I don't want to spend 1 hour on that. I could, but you cannot compare them. Actually, Ethereum and Bitcoin, you cannot compare. Bitcoin is blockchain 1.0. Ethereum is blockchain 2.0. And that does not mean it's better. That means it's different. In a sense that Bitcoin is, just buying and selling something. Ethereum is not a cryptocurrency, actually. It's a platform. The cryptocurrency is Ether, okay? And Ethereum is a platform, a bit like Amazon or these kind of things, where you can have smart contract. Means you can have contract, digital contract with people. And you can use cryptocurrencies in this digital contract. So that's the reasons for why Ethereum and Bitcoin, you cannot really compare them. The Bitcoin is just exchanging. I'm buying, I hope to sell it when the price is up. Ethereum, there is a project, there is a platform, there is a platform where people can buy and sell things. So it's a bit different. Another one, thanks, happy to see you appreciate the presentation. Do you personally recommend to invest in cryptocurrency, or is it better to invest in other financial products? If you want to, honestly, my opinion, I didn't invest in cryptocurrencies. I'm teaching investment in cryptocurrencies and this kind of stuff. Maybe because I'm too cautious or I'm too old, I don't know, but I didn't invest simply because I did a lot of econometric analysis of how the market is moving, and I still don't understand clearly the key trend. So that's my way of thinking. If I don't understand the key trend, I will not go. But that's a personal opinion, okay? That's a personal opinion based on my personal profile as an investor. So I'm not talking as a prof or as a, as a specialist. I'm talking as an investor here. It's my personal opinion. I do not, I don't say that people who are like to take risk, for example, okay, that's another profile. Maybe I'm not a risk taker, and that's the reasons for why I didn't invest. I'm more in investing in other aspects. Or I trust, I mean, I like the digital economy, and I really like a lot of things, but not necessarily related to cryptocurrency. Maybe that's an open door for another talk about token economy. I trust more things related to token than cryptocurrencies, but maybe I will not start on that now because I will take 1 hour on this. Maybe another talk on that with you. I would be pleased to do it. Okay, recently a dramatic increase in May. Yeah, well, that's a good question here, Ibrahim. Increase in the Bitcoin. Why? I think we discussed a bit before with Hui. The reasons for why, the uncertainty, and then people, they actually don't want to avoid uncertainty, and they will go for something that is not correlated with the economic uncertainty. That's the reasons. I think we have this kind of things. There's a limit in the number of Bitcoin. Yes, indeed. That's a very good point. Yeah, I didn't talk about that. So Jonathan, you have the question there. There's a limit in the number of Bitcoins, and does this limit the number of people who will be able to use it in the future? That's a very good question, and a lot of debates on that. And as you can see today, I carefully avoid the supply of money for cryptocurrencies. And there is a reason, because to talk about that, I need technical things. I need to talk about mining activities. And I didn't want to talk about mining activities today because it might take a lot of time to explain how the mining is working. And that's the reasons for why I carefully avoid. But to go to the point with your question, yes, there is a limit to Bitcoin. It's 21 million, okay? And according to the specialists, we might reach this 21 million in 2027, 2028. We might be there. So in that point, what does that mean? That means that in 2028, we will observe two things. Either people will continue to use Bitcoin because they think it's very useful. That means that the price of Bitcoin will become crazily high. Means that we will observe an inflation, a significant inflation in the price of the Bitcoin at that time, because people still think that it's useful to use it. Or the alternative reality is that people will stop to use the Bitcoin because at that time we will have so many alternatives that are not so demanding in terms of mining activities. If you're familiar with the mining activities, maybe you know what I'm referring to. But you know, if the mining activity is related to the transaction fees and these kind of things, okay, maybe in 2028 we will have other alternatives that are not so demanding in terms of mining activities, so that people will actually stop to use the Bitcoin to go for other alternatives. And to be honest, and it's a personal opinion, I will be totally honest with you, and personal, okay, opinion, I think that's the second path that will be the case. I think people will just take something else, because in 2028 we might have a lot of, you know, blockchain 5.0 or whatever. I think that will be, I might be wrong, but I think that would be probably the case. Okay, I hope I answer your questions by avoiding the mining, the details on the mining activities. How to solve money problem? By making money. Okay, I mean, yeah, but that's the point. But how, by at least to make the link with my presentation, by be sure that you are not losing money in the scam, and that's what I hope that I clarify a bit. YouTube channel, oh, that's a good idea. I should create one actually. I take note on that. I don't have. AKPK club maybe have. Any resources to learn in cryptocurrencies investing? There are a lot, actually. You might find a lot of books and articles on that. Well, in Taylor's, I'm teaching also blockchain economics. We have FinTech and innovation, you know, this kind of modules that if some of my students are there, you know, they might have seen that I use partly some materials, but I give much more details in blockchain economics, of course, because we have to be more detailed. A lot of resources around, you know, you have even the book, I think, Cryptocurrencies for Dummies and these kind of things, you know, I invite you to have a look on this. Why do you think people invest in Bitcoin according to your personal experience? Investing in Bitcoin, I would say, I would give you an answer of a financial person. I think to use the volatility, to play with the volatility and to hope that they can make a kind of good profit in the short term. But I don't think they are necessarily right to do that. But I think that's the major reasons for why people buy Bitcoin. A lot of people, they buy Bitcoin, they even don't know how it works. They even don't understand the mining activities and all these kind of things. So they just buy because it looks good. So I think they buy because they hope to make money quickly in the short term. So I think that's a personal opinion. Do you see that in the future the paper money will be replaced? And by the ordinary money system will be there? That's a very good question, and I really don't know on that. I'm reading a lot on this. I have read a lot of books. I have published papers on that, but I still don't know. I'm still not able to reply to your questions. And this is where I have to be humble and say that the more I know about this topic, I mean, about the future of the paper money, the more I know about it, the less I have the feeling that I know. Simply because with the digital and the cryptocurrencies, things are so different now that I have no idea about the future of the paper money. Simply, it's related to also what I was saying before. You have to keep in mind that cryptocurrencies is just one step. The next step is token economy. And we are in the crypto economies now. The future, I think, is token economy. Any kind of economic benefit can actually be used to buy or sell something. That's huge. What I'm saying is like much beyond the horizons of a money or a currency. I say any kind of economic benefit could be used as a tradable asset. So it's really extending the way we think. What is a money, by the way? What is a currency? But this is what we can guess behind the concept of token. And that's the future, I think. So, sorry, I'm not able to answer. It's more a philosophical answer that I would tell you. It's like the more I know, I mean, the only thing I know is that I don't know. This is what I would say on this, okay? AKPK Club on YouTube, yeah, I guess, okay, good. Any other questions? COVID makes financial decrease. Now we had a pandemic. It can make financial decrease. In the economic reality, for sure. So the pandemic and the financial decrease, yes, in economic reality, for sure. On the digital world, not so sure. Okay. How do you think about Malaysia government perception toward cryptocurrency? I see they create many regulations to control it. Yeah, it's So you are in Vietnam, so that's why you dare to ask me the questions. By being in Vietnam, you dare to ask the question saying, anyway, I'm not in Malaysia. So if the guy says something wrong, his business. So no, I mean, more seriously, I think it's not just Malaysia. It's every country in the world want to be sure that the cryptocurrency will not destabilize the economic reality. I think that's the job of any government in the world is to be sure that we have a stability, an economic stability, and in order to ensure that we have a stability and that everything is well organized, we need regulation. I mean, I'm not person against regulation. We need regulation. That's a reality. Cryptocurrencies are very complex. My perception in Malaysia, I think Malaysia is doing quite well in cryptocurrencies. They are quite open. They are really working well on that. There is a FinTech Association of Malaysia that is doing a very good job and really trying to promote the use of the digital world and these kind of things. I think they are doing quite well, but it's I would not say it's bad or good that they try to regulate. I think it's normal. That's part of the economic reality. Okay, university, good. Another question there, Hui. Because financial markets are down, yes. So perhaps crypto market is more attractive to invest. That's what actually we can observe, and this is what a lot of people are saying, indeed. So in crypto trading, it could explain partly. Yeah, definitely agree with you. So that's exactly in the link that I was mentioning before. Yeah, want to understand about blockchain and Bitcoin. Coursera, I have an introductory course there. Yeah, I mean, it's always that's a good resources. Thanks, Hui, to share with everyone. I think it's good. That's a good link. If someone would like to have a bit more information, thanks a lot for sharing. A good Wharton, moreover, Wharton Business School is extremely good. Question, okay, and okay, that's it. I think I am at the end here. I think I'm okay. No, I tried to go through all the questions. Yeah, I will stop to share my screen, maybe. Okay.
Yes.
Okay, so let me know if you have any additional questions, or if you have other questions that you didn't have time to send. I'm more than happy to reply by email or by another channel. Okay.
Thank you so much, Professor. We have actually created a poll on our Instagram, so if there's any question, we will send it to you for you to answer them.
Yeah, sure.
And yeah. That was a very, very detailed talk. I personally have zero idea what cryptocurrency was before this, and Prof. Chris just covered so much in the whole session. So before we dismiss today, yes, before we dismiss, our team would appreciate it if you guys can fill out the feedback form, paste it in the chat box. My team will leave the link in the chat box, or you can simply scan the QR code in the slides. I'm so glad to have you all attending tonight's Money Talk, Cryptocurrency for Dummies. And I'm happy to say that we are not dummies anymore, thanks to Prof. Chris. And as for my fellow Taylorians, if you're interested to join the club, do sign up through the QR code, or the link will also be pasted in the chat box. And also, I would like to once again welcome Madam Chong from MFPC. I didn't have the chance to introduce you properly just now. Would you like to give some talk about yourself or MFPC? Miss, you're not.
Hello. Hi, good evening, everybody. Thank you for having me. Thank you for inviting. Of course, we are not a FinTech associations, but we are a financial planning professional body. What happened is, I think I also learned a lot from Prof. Chris this evening. Okay, on cryptocurrency. I also have never invested in cryptocurrency. So I suppose that we can learn this together. Okay. I'm very happy that if in future that you have any topic, Dennis, which is relevant to financial planning, then just give us a thinker. Then we could actually share some of our experience here also. We work very closely with AKPK. Okay, because debt management and financial literacy is part of the financial planning process. If in future we have a chance, then maybe we could also introduce MFPC official to all your club members, the AKPK club members. Okay, but I think today, thanks a lot. Thank you for inviting. Okay.
Thank you, Miss. All right. So once again, I hope you guys will fill out the feedback form, and you will get an e-certificate if you fill out the feedback form. So signing off is Taylor's AKPK Director of Public Relations and Events, Dummies. Do follow our Instagram for more updates in future activities and events as well. And I hope you guys have a great rest on the weekend. Have good dinner if you haven't. And happy Deepavali to those who are celebrating next week. Thank you. Good night.